So glad you're with us on the Retirement Revolution. Brad Johansson with Rob Guy, tax and investment advisors. How are you, my friend?
I'm doing very well today, Brad. Thank you.
Well, we're asking everyone out there, how are you doing today? Because the market volatility has kind of shaken the world. And it depends on where you sit as to how you feel today. We're going to go into some of those feelings and where your plan sits as we move forward on this land of uncertainty.
Yeah.
How should people feel during this market volatility time? Because there's a lot of scared, worried folks.
Yeah.
When everything's going great in the market, we all feel pretty good.
Right.
Except there seems to be adjustments. And there were a lot who believed this was just going to continue to ride out like it has for most of the last 4 years.
Right.
What's different now?
Well, there's a lot of things that are different right now. And you're right. There are a lot of people that are very concerned with the volatility of the market. And we've had 15 years of a very strong bull market where the market seemed to be going double-digit returns practically every single year. I think a lot of people got complacent. Why it's so different this time, I think, is it's been such a long time since we've had really a retraction quite like this.
Is the situation kind of based on what you talk about? You talk very much about a retirement freedom roadmap.
Right.
Do people not have their retirement mapped out? Is that what creating the fear? Or do people feel like they have been taken care of for a long time? And just because the change makes them a little bit antsy, I suppose I throw that out on both ends as to where we look. What's your take on that?
Well, I think there's a couple different ways to look at this. If you're in your 20s, 30s, 40s, or even 50s, and you have a long way to go before you're worried about having to tap your retirement money, then maybe you can ride this out. But if you're anywhere, say, 5 years before retirement or 5 years into retirement, that's a very dangerous time. And what I've found is the advice that most people have been getting out there from your traditional brokers, internet, mutual fund companies, whatever it is to just keep your foot on the gas, keep going, get as many returns as you can. Don't worry about if markets drop because they always come back. But what they don't tell you is that it might not come back in time to matter to you.
Yeah.
Because really it doesn't matter what the market does over 100 years. It matters what it does over the next 5 or 10 years for you. And there's plenty of times in history where the market has had bad or even negative performance over a 5 or 10 year period. Not many people are building this into their plan. So people who come to see me, maybe they were referred to me and they come in and they show me what they have. I can see most people are way overweighted in stocks. And I've been trying to warn people, start thinking about moving from that accumulation phase of your life where you're saving and working to the preservation. Try to keep what you have and distribute it in a tax efficient manner. But what happens is the returns are so good and everything's going so great, nobody wants to make that change until things go bad. Now things have gone quite south, right? So the markets are down about 15% from the highs as we speak today. And people are wondering, gee, what should I do? And the only way you can actually know if you can withstand that is to do a thorough analysis of your income plan, your investments, your taxes. You take a look at everything. So you know how much money you can have at risk and how much money you need to get into safety.
The question of risk tolerance now and then risk capacity as to where you are in the difference. Give me a little history lesson, if you would, on the market, some of the past numbers, where we've gone. Because people say, well, I don't want to know what happened in the past. Well, the past in the market gives us a lot of ideas about where we're going to end up in the future because it seems to recur. Give me an idea what you've experienced over your 35 years of experience with this.
Yeah, extreme volatility. And we could go back, say, to the market correction, say, of 2001, 2002. Okay. We had the tech bubble burst.
Yep.
And the S&P 500 was sitting around 900, let's say. And then it recovered. It went up to about 1,400, and people were feeling pretty good. Then 2008 happened, a financial crisis. It went back down to 900. So there were people who had 5, 6, 7 years of zero return on their portfolio. During that period, though, they went up 100%, down 50, up 100%, down 50. It ended up nearly 10 years later where they began. That sequence of return. So it really only matters, Brad, what's going to happen in the next 10 years to you. Are we at the beginning of the next 10-year bear market? I really don't know, because from the low of 2009, when the S&P 500 closed around 900, in January of 2025, it was 6,000.
6,000.
6,000. So it's now come down to 5,000, but it was 6,000 from 900. That's more than a 5-fold return people have gotten on their money in the last 15 years or so.
How often is it that people want your crystal ball to work? Tell me what's going to happen and what's different about what you do other than predicting the future.
Right.
You're kind of planning for, I don't know what's going to happen. So
Right.
since we don't know, here's what I put together. Give me an idea what that looks like.
Yeah, so that's exactly right. I don't predict the future. I don't have a crystal ball. Nobody does. People say to me, where do you think the market's going to be in a year from now? I have no idea. What do you think interest rates are going to do? What do you think inflation is going to do? What do you think tax rates are going to be? I have no idea. I don't, you don't, nobody does. That's the problem. There's all these things that are happening that are completely out of our control. But you know what we can control? What we do with our money. We can control how much safety, how much income, and how much growth we have in our portfolio. We can make sure that we're coordinating our Social Security benefits with our pension distributions so that each piece of the plan is all speaking to one another. The best way to kind of deal with all of the uncertainty and the confusion and the overwhelm is to have a step-by-step plan that really lays out the future for you and tells you what you need to do so that you're going to be okay no matter what happens to the economy, interest rates, taxes, or whatever politicians might be doing in Washington, D.C.
You began this process, your process began in the industry 35 years ago or so. But about 6 years ago, you said, you know, I need to put this in pages where people can read it and give the others. Tell me a little bit about the book and what's in it and the offer that people may have to be able to get one for free.
Sure. So yes, I did write a book so I could put many of these thoughts down on paper so that people could get a strategy in one place to where they could find out some of the answers that I found so many people were looking for. So what I have done is I've identified, I think, the 5 most important areas that one needs to pay attention to if you want to have a comprehensive financial plan. And really what you want to look at is your investment strategy. You want to look at your income strategy, your tax strategy, your healthcare and long-term care strategy, and your estate and legacy strategy. All 5 pieces of those, of the pie, if you will, need to be working together and in coordination with one another. The real problem out there, Brad, is nobody's getting that. People think they have advisors, but they don't. They just have a portfolio. For example, we talk about an income plan. Well, what does an income plan mean? An income plan means what are you going to have coming in from pension? What are you going to have coming in from Social Security? And what is your retirement income gap? And then so let's say you need $70,000 a year to live on. Pension and Social Security is going to bring in $50,000.
Okay.
You have a $20,000 income gap. Now you have $1 million portfolio. How are you going to make up that $20,000 portfolio in the most tax efficient way with that money?
So you say that people are more heavily weighted in the market than they probably should be at this time.
Yes.
Does that mean that they are sitting on, here's my portfolio, with an advisor who hasn't talked to me about that, and I haven't adjusted for the safety net that I probably need with a very short runway going forward in retirement?
Exactly right. And the chances are that they've never had an analysis done that does what we call lifeboat drills, where we take a look at, okay, if everything goes great, here's your projected income, cash flow, net worth over your lifetime. Let's do some lifeboat drills though, Brad. What if inflation isn't 3%? What if it's 4%? What if the market isn't 10% a year, it's flat? What if one of you were to pass away early? What if one of you lived till 95 or 100? You know, market crashes, interest rates, inflation. We need to do all the what ifs. We have really powerful, sophisticated software that allows us to do just that. So you have the answers to all the questions in advance. And then a plan is not something you put together once. It's an evolving thing. You have to adjust that plan as you go because things will change. And so you've made certain assumptions when you put the plan together. They may or may not happen in reality. So you adjust the plan as you go. It's not a one-time thing.
I like lifeboat drills. You came up with it. Do you put people through? This is just what if scenarios for a lot of people.
Absolutely, yeah. What if one of you needs long-term care? What if you both live to 100? What if tax rates are 50% and not 30? That type of thing. What if stock market does nothing instead of you're planned on 10%? I run into a lot of people who do software online, or they have, some broker or mutual fund company who will run some analysis for them. A lot of times people don't understand those analyses are only as good as the assumptions that go into the plan, and many times the assumptions are flawed. So I really recommend you have a professional to help you interpret those numbers.
Well, do you have a professional that's been working with us, and maybe just even in this market volatility and your nervousness, and you haven't spoken to anyone, or maybe you're hearing something for the first time today that your advisor hasn't spoken to you about? Well, maybe it's time now to come in for a retirement freedom roadmap that's complimentary. Maybe the lifeboat drills are something that you need right now. Within that, a retire free book is yours complimentary. 855-255-1128, or you can scan the QR code on your screen to set you up for a complimentary retirement freedom roadmap. The idea, let's figure out where we're going and how we're going to get there. And maybe you are too heavily weighted in the market right now. Maybe you don't even know what the plan looks like. Let's put together a roadmap for you. Make the call, scan the QR code. We'll be right back after this.
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just the downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination reign on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
So glad you're with us on the Retirement Revolution. Brad Johansson with Rob Guy, Tax and Investment Advisors. And we're encouraging you to make a phone call to get a retirement freedom roadmap during this time when you are maybe a little bit edgy about where your money is and what the future looks like. Sometimes, Rob, we don't get a choice on, quote unquote, when we get to retire.
Right.
We have an idea of when we want to, but now is the time. The job may have changed. Circumstances at home may have changed. And so people will go into advisors and say, hey, what's your average rate of return? I'm looking for somebody who's going to be able to get there. You like to talk about sequence of returns and the timing that we probably need to be hedging.
Right.
You've talked about your lifeboat drills, the what if stuff. Give me an idea on sequence of returns, why that matters so much if all my money's in the market right now to try and figure out how to retire.
Great question, Brad. Sequence of return, again, is one of those bigger risks, maybe one of the biggest risks that people are facing in retirement. And one of the things that we like to do is run a lifeboat drill. Okay, so I had a client in the office the other day, and what we did was we took their existing portfolio and we put it into our software program, which really has some very, very interesting information that it can tell us. It can tell us the fees that they're paying. It can tell us the risk and the volatility. It can tell us, how much duplication there is in the account. But one of the more important things I do is I put people's existing portfolio in this analysis, and then I say, what would have happened to your money in 08, 09? This exact portfolio you have right now, what would have happened in 08, 09 if the market had crashed? Very often I show people and it says their account would have gone down 30 to 40%. So maybe that's $300,000 or $400,000 or more for some of these people. Usually what I like to say is, how do you feel about losing $400,000 at this point in your life? You didn't have as much money before, so you didn't lose as much money, but now if it happened again, that's a big number. You really want to lose 3, 4, 5, 6 years worth of work in 2 weeks, which can happen. So they're not aware of that. I say, when I do a questionnaire, I say, what did you say risk tolerance is? They usually say, we're pretty conservative, moderate at most. And I say, did you tell your advisor that? And they say, certainly I did. And then I look at their portfolio. It's 70, 80, 90% stocks with a downside potential of 30, 40 or more percent. If you lose 50% of your money, you need to earn 100% just to get back to where you started.
So the idea of your standard deviation is, well, I've never even heard of standard deviation. Well, your standard deviation is if something bad happens over this period of time, how much could you drop as you talk about that? And then in coming back, the interesting thing about talking to advisors about, well, where do you stand? Well, I'm a moderate, I'm conservative, I'm conservatively aggressive. The thing is that this is all a feelings test.
Yeah.
When we talk about the risk tolerance and the risk capacity kind of thing, there's something beyond how I feel about where my risk is, and then what my portfolio looks like.
That's exactly right. That feeling is a big part of this. And it's one of the reasons that I really recommend most people shouldn't manage their own money. Now, some people, it's a hobby and they love it and it's fine. But other people, you're so tied to your own money, your emotions can take over. And so it's really kind of not to your advantage to be thinking about your portfolio in terms of fear every day and looking at it every minute and trying to figure out exactly what you're supposed to do day to day.
How do I do a bucket strategy? Because you kind of talk about this, having money in different places. If I'm in this fear mode, if I'm working by myself, I'm working for somebody who hasn't even talked to me about this, what does it look like for me? If you say I'm overinvested in the market, how do my buckets work to make retirement work a little bit easier for me and I can have a little sigh of relief?
Right. Yeah, the sigh of relief comes from knowing your strategy will be able to withstand a lifeboat drill or, one of those big drops. Really, and the best way to do that is to analyze what your income need is going to be. Figure out what income you're going to have coming in. Say if you're lucky enough to have a pension, not many people have pensions anymore, but they do have Social Security, which will be coming in. And then you find your gap, right? We talked a little bit about that before, the retirement income gap. How much are you going to need to bring in every year? Well, let's say you've determined you're going to need $20,000 a year for the next 5 years in addition to your Social Security.
Okay.
Well, what we do is we set up a bucket strategy where we have 3 different buckets where we put your money. Bucket 1 is the short-term money where we're going to put your next 5 years worth of need. That's going to be short-term money markets, short-term CDs, savings, different things that are liquid, safe, that you can put your hands on right now. That's bucket 1. We always have about 5 years worth of income that we can generate from bucket 1. Bucket 2 is our income generating assets. So bucket 2 might be filled with bonds, it might be filled with annuities, it might be filled with preferreds, dividend-paying stocks, different things that we can use to fill up the cash bucket as that gets low.
Gotcha.
And so there's no volatility in the cash bucket. There's a little volatility in the income bucket, but not much, but it's generating cash that's going into the cash bucket. And now you have your growth bucket. That's your stocks. That's your long-term investment. Now, what people used to do is they'd mix this all together and they'd take a 4% per year out. It's called the 4% withdrawal rule. And you just let your stocks go up and down, and you'd sell as many shares as you need every month to create your income stream.
Tell me it doesn't work anymore.
Didn't work. Okay, 01, 02, and 08, 09 really showed that strategy is not going to work. And people really did get devastated and lost their ability to retire comfortably during that period of time. So we realized that segmenting your money or putting it in different buckets for different time periods really is the way to go. And the money you have in the stock portfolio, our clients, any money they have in their stock portfolio, we know we're not going to need it for 7 or preferably 10 years. So if you're going to need money within 7 to 10 years, it shouldn't be in the stock market. You know why? We have no idea what the stock market's going to do in the next 2, 3, or 4 years. In 7 to 10 years, hopefully it will have come back. But we can't risk your family's retirement future on your hunch that the market's going to work out okay. It might not. The consequences of it not are devastating. So you run the numbers, you fill the gap, you find out the gap, and then you have 5 years worth of that gap income need in place. You have your income bucket, you have your growth bucket, and then when you put your head at the pillow at night, you know what you do? You sleep like a baby because you're not worried about your stocks. Everybody's freaking out. It's like, I know I don't need mine for 7 to 10 years. Rob set me up with an income strategy, and I know I'm going to be okay because we did the lifeboat drills.
So the people sometimes calling now are the people who haven't talked to you yet, because the people who are with you for the most part go, he told me this might happen.
That's 100% right.
He told me that I probably need a plan. And when you have a plan, give people an idea what you're offering for them with this roadmap, if you would.
Sure. You know, after a lifetime of hard work, you deserve a stress-free retirement. And if you want to sleep well at night, knowing you've made the right decisions for you and your family, you need a plan. You don't just need any plan, though. You need the Retirement Freedom Roadmap. With the Retirement Freedom Roadmap, we can take a look at your specific situation. We can run an income analysis for you. So, hey, maybe you want to know if you can retire right now. Well, we might be able to help you answer that question. We could put your mind at ease knowing that you're going to have enough money to live on, help you with Social Security maximization strategies. Having an income plan in place is really going to make you feel better. Have an investment strategy in place where we're taking the risk off the table and just having enough growth so that you can outpace inflation and taxes. We want to have a tax strategy where we're minimizing your taxes and doing everything we can to be proactive to keep more money in your pocket. We want to have a healthcare plan so we can keep you out of the nursing home, keep you at home, avoid Medicaid bankruptcy, and allow you to protect yourself and your family. And finally, an estate and a legacy plan where we can make the most of what you've got, help you build a legacy, and be remembered for years to come.
This is the roadmap that you need, and it is all complimentary if you make the phone call, 855-255-1128. The book, Retire Free, comes with it. Right now might be the best time. If you've watched and been waiting and saying, you know what, I probably should call, make that call now. Scan the QR code. Let's put together a retirement freedom roadmap just for you. We'll be right back.
The work never seems to end until the day it finally does. After nearly a lifetime on the job, you should be rewarded for all the time you spent working. Whether that's crossing off items on your bucket list, learning a new passion, or rekindling the love of an old one. After all, life isn't over when you stop working. It's the start of an all-new chapter, the one where you're the writer and you get to choose how your story will go. A way to achieve that is by having a clear financial plan to sustain your golden years. The biggest fear most retirees have is if they'll have enough money to maintain the lifestyle they've always enjoyed. Having a plan to help protect you against the curveballs life often throws will help to maintain your lifestyle. Call today to get your free written financial plan so you may live every day to the fullest and enjoy the retirement of your dreams.
Glad you're with us on the Retirement Revolution. Brad Johansson with Rob Guy. I want to throw this up, if we can, real quick, because Rob has put this together. He mentioned this as part of the plan. The Boston tax test is where you're going. When you're feeling worried about how much money is out there, how much I've got in the market, how much I'm going to pay, maybe you haven't even paid attention to the taxes. Rob, I want to talk about it because we're short on time, but you put together a tax calculator that gives us an idea of what the government's going to do and what you may be able to do.
That's right. The retirement tax calculator is really designed to help you figure out how much you might owe in taxes over your lifetime from the required minimum distribution. So you might be saying, I've accumulated 500,000, or you might be saying I've accumulated 5 million. Everybody has a question.
And this is my number.
And this is my number. Okay, so what you can do is you can plug that number into this plan, and that will tell you what your tax liability is likely to be in the future, your federal tax liability. at least it gives you an idea of what you're looking at. It's not a be-all, end-all, but if you want to have an understanding of the type and the magnitude of taxes you might be facing, this gives you a pretty good idea.
Yeah, I'll give you a warning on this. If you're heading to it, bostontaxtest.com, scan the QR code. It really only takes a couple of minutes, but it is eye-opening to the point of, holy, I know what? And the idea that there are strategies involved to trying to figure this out. While we're worried about market volatility, while we're worried about what's ahead, these are strategies that when you put the roadmap together, the taxes may be the biggest hurdle.
Yes.
This gives you an idea of, when I see this number, what the IRS wants from me.
Right.
Maybe I need to come in and put it as part of my plan.
Yeah, now is a great time to do that, Brad, because the market is down. You know when's a great time to do a Roth conversion? When the market is down.
Timing.
If you want to, you can move maybe $100,000 or $200,000 out of your traditional IRA, convert it over to your Roth IRA while the accounts are down, pay taxes on the lower amount, and then it'll come back up in the tax-free account. So why not take advantage? Use this volatility to your advantage. It's not all bad.
I think, and that's what we talk about, that taxes are, before the market goes down, taxes are on sale right now because of the Tax Cuts and Job Act that is going to end at 2025 unless Congress decides to do something else.
Yeah.
Timing on this, knowing the rules and taking advantage of the rules while you have them is what you stress all the time.
So true, so true. I mean, don't wait. We have a unique opportunity right now, a window of opportunity until the end of 2025 when the tax rates are due to go up. So if you have a thought that this Roth conversion thing might work for me, Rob's told me I could maybe save tens or hundreds of thousands of dollars over my lifetime. Sure, I'd like to do that. Well, don't procrastinate on that because you might be able to get almost $100,000 more into a Roth account this year in a lower tax bracket than you'll be able to just 1 year from now, or 6 months from now, January, really. So what we have to think about is the right time to do this now, or do we want to wait? I would say the right time to do this is now.
Very rarely are you going to hear on this program, it's probably better for you to wait. The idea is if you want to put a plan together that's going to last for 10, 20, 30 years in retirement, the time is now. And you've been waiting. Well, now's the time. 855-255-1128 to be able to come in for a complimentary retirement freedom roadmap and take a look at what the taxes are going to do. Get a copy of the book and maybe find a plan that works. Thanks for joining us. See you in the office. We'll see you right here next time.